Hello everyone, my name is Ram Dhamija. Welcome to my channel. Today is the weekend of 25th to 26th October. It has been a okay month, actually a decent month for the markets. We are up almost 3.5% on Nifty. Usually October month is quite rough for the markets, but this time it has been pretty decent. That is also something got to do with the fact that last couple of months we had just been consolidating after the rally which started on April 7th, which was basically one way up. We kind of paused for some time and then we have been consolidating in a range. So October was good for us, and the indexes actually went up by almost 3.5%. At one point in time they had actually gone as high as 5%, but some retracement has happened in last couple of days, which is pretty much normal, which is pretty much par for the course for consolidation of the markets. So it has been a good ride. Last 1 week has been slightly choppy at best, if you can say that. We kind of gapped up on the news that there is a potential India US deal that might happen. There were some reports that came out in some publications, and the market actually got quite enthused because of that. And also what we saw was that Gift Nifty, which was open on Friday night, that kind of gapped up by almost 400 points odd. And that is the that really created lot of anxiety amongst people that markets are going to make huge new highs. But that did not hold, and eventually we came down last yesterday especially, which is a Friday. It kind of retraced back all that gap which it had created. So it has been a rough last couple of days sessions, especially with the up and down movements. Nifty has not been able to hold the highs which it made, and the markets are looking slightly toppish right now. But I think it's generally a par for consolidation, because if you look at the long term trend, the markets have been trending upwards. So I will take you through what is the outlook going ahead into next week, and what are the critical levels to watch out for. Along with that, what is the important data to see, and how you can position yourself. So let's begin today's video. We will start off with the Nifty chart. This is the Nifty daily chart. As you can see over here, that this is the Nifty high that was made. So just one clarification: Gift Nifty, the high that was what was seen was actually on 22nd night when we were closed, not on Friday. That was just so on 24th, actually 23rd, which is day before, we actually opened gap up, and it was looking like we are going to cross all-time high of 26,200. At least that is what Gift Nifty was indicating. But then came the consolidation part. So all of that, the gap that was there, got filled over here. Anyways, the larger point being, there were two resistances that I was talking about. One was at 25,600, which we cleared comfortably, and now which will become the support. And then the ultimate resistance is at 26,200. So as I had said, that markets go in a stairs fashion, and if that stairs fashion is holding, then it's a good sign for the markets. So you can see that from the bottom we made on 1st of October of about 24,575, we have actually gone in one way to 26,100. It's a good clean 1100, not 1100, it's a good clean about 1600 point move right from the bottom. So which is quite remarkable if you see. So there is some consolidation that will happen, of course, and I was hoping that the consolidation would happen somewhere over here, but we have broken this resistance also of 25,600, and we went above that. So now the next, we might consolidate here for 3-4 days more, and then after that we should make a gap up towards 26,200, and I think we should be comfortably be able to take that out. So that will be the prognosis for Nifty. Another interesting thing to see in Nifty is that Nifty 50 DMA is now below the 20 DMA. So that actually got crossed over somewhere towards the mid to end of September, and usually that is a very bullish sign. As you can see over here, whenever that happens, the markets for a long term they have a uptrend. So that looks like that is another positive thing. And also the 200 DMA is now history. it is way below at 24,200. One more thing I would like to take your attention to is the higher high, higher low pattern. So if you see over here in Nifty, the higher on 21st August, the high was made at 25,100. Then the high was made at on 18th of September at 25,400, and now on 23rd of October we have made a high of 26,100. So it's higher high. Similarly, the lows have been much lower. So as long as our last low of 24,500 is protected, we are in this particular uptrend, and that is still a huge way off. Also, if you look at the Nifty last 1 month performance, last 1 month, as I was saying, we have given 3.63% return. But if you look at the last 1 year performance, Nifty has given about 6.6% return. Now you compare this to, let's say, a Dow Jones which has given 12%, Nikkei which has given 30%, Hang Seng 27%, even Banknifty has given 13%, FTSE 16, DAX 24. So the whole point is that the entire world markets have been performing very well, whereas our Nifty has been kind of lagging behind. It is a huge time correction that we have undertaken. It's almost been 14 months now since we have not been able to cross the last high. Typically when these time corrections happen, then it's a spring which is waiting to uncoil and propel the markets to all-time highs. And that is what I'm also expecting, that soon this correction will be over, correction, consolidation, whatever you may call it, it'll be over, and then markets have blue skies. Then any number, any figure can be achieved if if the market texture is fine and if there's no international bad news coming in. In fact, now all the indications are that there will be good news from the international front, like India-US trade deal. Again, a lot of news is there, and most of it is unsubstantiated. So you have to be slightly careful how to interpret it, because sometimes they say in some publication that the deal is very close, then something else happens. So till the time the deal actually happens, I will not be very sure about it. But whatever little we are hearing is that there is some progress that is being made. And if that happens, then the tariff on India can come down from 50% to 15 or 17%, something like that. That is going to be hugely positive, and the day that happens, you can expect that markets are going to gap up by 3 to 4 percentage points. So the whole point being that if you have missed out on this particular recovery, or you have been left out, or you've not been investing, it is as good a time as any to invest in the markets. And you should not miss out on opportunities whenever you get, especially such time corrections, because when markets break their all-time high, then you'll not be able to catch it. Then you will be anchored, stating that, oh, I should have bought it at 25,000. I'll wait till 25,000 comes, or I'll wait till 25,500 comes. But if 25,500 is there today, and your markets have not given you too much return in the last 12-14 months, it's a good time to go and invest. And continue doing your SIP books, continue investing in mutual funds. And if anyone is interested in making their mutual fund portfolio a solid, robust mutual fund portfolio, they can contact me through the Google form given in the description below. I help people build their mutual fund portfolios. I work with a company called as NJ Wealth. They are India's largest mutual fund distributors. So you will just need to open an account with them, and we will then start your journey in mutual fund investing as well. So I have a lot of happy and satisfied clients who have seen the benefits of investing in mutual funds, and our endeavor always is to try and outperform the markets with the least risks that we can take. So if anyone is interested, they can fill up the Google form, and I shall get back to you. So as I was mentioning, this is a good time to invest, and you should not miss out. There are so many things happening in the market right now, so many sectors that you can actually look at. For example, you look at things like even small cap, though the valuations are high, but some small cap mutual funds are available for as low as 20p, whereas let's say a small cap index is available at 30p. So I'm saying there are a lot of good flexi cap funds which have been outperforming the market. So there's a whole host of mutual funds that one can look at while making the portfolio, and that is what we try to do. Okay, now coming back to the markets. This is the Bank Nifty chart. Bank Nifty is much, as I had mentioned before, is much stronger than Nifty. You had seen that in the performance as well. And Bank Nifty actually made a new all-time high as well on 23rd of October. It is, I think, the next level, logical levels perhaps for Bank Nifty will be closer to 60,000 as and when that happens. And over here, if you recall, during my videos, I had mentioned that Bank Nifty, when it started making a high on 1st and 2nd of October, I had said that it's going to make an all-time high. It's not going to stop, because the momentum behind Bank Nifty is so strong that it just ended up making all-time high. It's nothing new for it. It has made all-time highs this year many times over. So Bank Nifty, Fin Nifty, financials as a whole are doing really well. Now let us look at the open interest. Open interest right now has turned slightly bearish because about 6 crore calls were written yesterday. But if you look at the total open interest, it is again at 0.66, which is 25 crore calls versus 16 crore puts. So this is also slightly bearish right now. Let us see how things play out. There are 2 more days left for expiry, so we will come to know how that plays out. But right now it is slightly bearish. However, if you look at this data, you will feel that the bearishness, especially for FIS, has reduced. So this basically data is of the total FIS index futures long and short. So FIS at one point in time were 91% short. Now they are 75% short. So you can see over here they have about 52,500 contracts. So they have covered a lot of their shorts, which is a good news for us. And if it is also manifested in the data of FIA buy sell, if this month you see FIS have been buying last 1, 2, 3, 4, 5 days, they have been buying or at least not selling. And if you see month till date, it's been flat for them. But if you look at the other months before this, they had been heavy net sellers. September they sold 35,000 crores, August 46,000, July 47,000 crores. So whenever FIs sell this heavily, the markets actually can't go up or they go down. But FIs this month have not sold much and markets have been very well received, very well. So it is all good. It looks like so FIs are also bracing themselves for an upward movement. It looks like this is the chart which shows how much each index is down from the 52-week highs. Anything that's less than down 2%, you can assume it's making a 52-week high. So you look at Fin Nifty, Bank Nifty, even Nifty, PSU, metals, commodities, private banks, everything is at almost at the 52-week high. Mind you, this is not the all-time high, this is the 52-week high. The things that are not doing so well are Nifty Next 50, FMCG is down, Realty is down 17, Momentum is 14, Alpha is 15. So Momentum and Alpha, as I have said, and IT is the worst performer at minus 22. Momentum and Alpha have maintained are only going to start when the next bull run starts. What is the other data that we need to look at? So this is the performance of each of the sectors over the last 1 week. I'm going to talk about the sectoral performances tomorrow in my mutual fund special, how each of the categories of mutual funds have performed. But just to give you a broad outlook about how the performance has been of each of the sectors over the last 1 month, 1 week, you can see that IT is trying to make a comeback over the last 1 month at 6.7. I think it's just basically bouncing from the oversold levels, but real strength is somewhere in banking, where you can see a 6% up move in banking, because see over here you can see the stark difference. IT is up 6% in the last 1 month, but YTD is down 16%. Banking is up 6% in the last 1 month, but it is YTD it is up 13%. So this is basically where strength is shown in a particular index. What are the other things? Nifty 500 is basically up 4% in the last 1 month. Same as with Nifty, and I think rest are all within 1 to 4% kind of a range. There is nothing special to look about them. So all the indexes are trying to make a comeback along with Nifty, with some outperformance coming in from the financials. Now let us look at what the international cues are suggesting for us. So US 10 years and 30 years have crashed, which is very good news for the markets. And there was a talk about the inflation data coming in slightly closer to 3%. Now 3% is the new 2% for US, it looks like, and markets have started sharing 3% news on the assumption that rates are going to get cut, and that's going to be good for the markets. So let's see how that plays out. But the yields have gone down, which is good. S&P VIX cooled down by 5 percentage point, which is good. So yesterday all US S&P, Nasdaq all rallied 0.7 to 1%, and US dollar index has gone slightly up, but it is still below 100. Anything below 100 is fine. In the long term, this will perhaps go to 90 if dollar continues to loosen a bit. Brent oil went up from 60 to 65 after the sanctions on some 2 Russian entities, and USD INR has recovered a bit. I think a lot of it has got to do with the gold rally, which was getting out of hand, and I think there was some intervention, and there the currency actually went from 88.7 to 87.8 now, so which is good. Gold and silver are cooling down. I will try to cover that tomorrow as well. So gold has corrected almost 6-7% from the top of $4,400 it made, and same is the case with silver. Silver has corrected even more from 54 it made to 48. Also, if you see, this is the silver future, this is the silver spot. So the difference between spot and futures is finally over. So that backwardation thing is finished now, which is a good sign. And Bitcoin has corrected from 125 to 111. So the queues are all fine. Internationally, the queues are fine. Domestically, the queues are fine. It is just that this week is an expiry week for monthly expiry as well. So we might see some sharp movements coming in. But otherwise, the month has been good. I think we should prepare ourselves for all-time high. That's what it looks like, until unless, of course, we crack some 1,000 points from here and we make a new lower low. I don't think that's going to happen. Even if we consolidate in this range, it is beautiful actually, because it gives you time to construct your portfolio. Because again, I'm repeating, any portfolio constructed during this point in time will give you very good rewards and dividends 2 years, 3 years down the line, when probably we'll see the markets much higher, because that has been that is how markets operate, and markets are not very expensive also, at least on the large cap front. So it's a good time for you to invest and consider making your portfolio, and do it through mutual funds only. Don't try to get into direct equities, because it's a full-time job, and I've seen a lot of retail people, they try to construct some portfolio, they succeed and they think they're doing well, but what they miss out on is that they don't benchmark themselves against the market, and over the long term, when they see that market has actually outperformed, and they say, what was the point? We could have actually taken a good mutual fund and which would have outperformed the market. So do it through mutual fund. If you need some help, you can always contact me, and take the help of an advisor. There are good advisors now these days, who ensure that your portfolio is also does very well. So gone are those days, when there was mis-selling and all. I'm not saying that it doesn't happen, but do contact a good advisor who knows about the market, who's preferably a market participant, and who can guide you. So then you tend to make a tremendous amount of wealth. So I do that for my clients, and there are a lot of other things also. You come to know, like for example, if someone wants to do financial independence planning, or retirement planning, or planning for their kids' education, and so on and so forth, there are various ways to do it, in which you will there are various instruments to do it. So do seek help if you don't think that you have the time or the inclination or the expertise to do all this. So that's it from me now. I hope you enjoyed the video, and if you did, please do subscribe to my channel. Please do like, share, comment, and I shall see you soon with another update. Take care. Bye bye.